Hey guys, how are you?
Hey everyone, how's things?
Hey. Hello.
Just been following the DeFi news recently. I think all the attention seems to be on Avalanche. You know, there's new liquidity mining incentives. I think the price of the token itself's gone about 113%. You know, let's see which protocol, new protocol on Avalanche will be the first one to get hacked, because it's only a matter of time, right? It's what always happens. This happened with Polygon a while ago, and of course the Binance Smart Chain when it first started its farming sort of liquidity incentives. There's going to be a lot of hacks. It's early days for Avalanche, but there's going to be. I think I saw a list recently. There's about 100 plus protocols building on there now because there's incentives, and they're going to launch in the next couple of months. I just see a number of exploits and hacks incoming for that one.
Awesome. Well, hello everyone who is joining us today here as well. Steady State welcomes you all and thanks you for joining us. My name is Sylvia, aka Crypto Empress, and I am the CMO of Estonian Cryptocurrency Association. I'm here today to help you get your questions answered and to delegate the Fireside Chat. Any questions you have during the presentation of the speakers, you can write them to the stream chat and I'll forward them later to our hosts. Our today's main speaker is Tim Frost, who is the CEO of YieldApp. And joining him also here are Jonathan Libby, who is the founder and CEO of Steady State, and Akash Mahendra, who is the head of strategy and operations in Steady State. Our discussion topic for today is the YieldApp and Steady State partnership. But before that, we take a quick look at the recent news in DeFi related to hacks, exploits, and politics. Leading Japanese cryptocurrency exchange Liquid Global has been hit by hackers with almost $100 million estimated to have been stolen. The company announced on Thursday that some of its warm wallets have been compromised and that it was moving digital assets offline. Blockchain analytics firm Elliptic said its analysis showed that around $97 million in cryptocurrencies had been taken with Bitcoin and Ethereum tokens amongst the whole. Liquid Global has said that it was tracing the movement of the stolen cryptocurrencies and working with other exchanges to freeze and recover the assets. Liquid is one of the 20 biggest cryptocurrencies as ranked by daily trading volume per coin market cap. SushiSwap's Miso token sale platform had an exploit that could have been used to steal $350 million worth of Ethereum. A crypto researcher from VC firm Paradigm says he discovered the exploit and worked with SushiSwap to neutralize the threat. The researcher explained how he began examining the smart contract code for the BitDAO token sale at SushiSwap's Miso platform, which is a launchpad for new tokens. That sale ultimately went off without a hitch, raising $365 million in the process, but it all could have gone very wrong. The researcher says he spotted potential issues with the smart contract. Further experimentation revealed an exploit that could lead to all of the Ethereum in the token auction contract being drained by an attacker. The SushiSwap team shared additional information about the discovered exploit, noting that no funds were lost and no user action is needed as a result. They sure were lucky because the recent reports state that DeFi has lost $474 million to hacks and fraud in 2021. That's a lot. And lastly, U.S. Securities and Exchange Commission Chairman Gary Gensler warned that decentralized finance projects aren't immune to oversight by the market's regulator. Even though they are decentralized with no central entity in charge, DeFi projects that reward participants with incentives or digital tokens could enter territory that is subject to SEC regulation, he said. there's still a core group of folks that are not only writing the software, like the open source software, but they often have governance and fees, Mr. Gensler said. There's some incentive structure for those promoters and sponsors in the middle of this. And to all of that, I just have to say that now, after we have added this hacking news section into our weekly Fireside Chat, and after reading week after week about all of these major hacks happening that I usually like maybe not even noticed or get all this information so much, then I see now how important it is really what Steady State is building and trying to solve. So this is truly an eye-opener for me. But now, let's talk about the Yield app and Steady State partnership. To those of you who don't know, Yield is a licensed and regulated fintech company that enables anyone to invest in decentralized finance with the touch of a button. Thanks to their intuitive app and web platform, users around the world can start earning returns from DeFi projects without having to go through lengthy, complex, and often costly learning process. As previously said, today we have here with us Tim Frost, who is the CEO of Yield App. Can you please, Tim, reflect on the first year of Yield App, the different triumphs and tribulations?
Yeah, absolutely. No, thanks, Sylvia. And it's a great reminder, actually, hearing the news of just all the security incidents in just the last week. It's such a reflection on why proper insurance is needed and why it's such a hot space overall. So we're actually right now it's actually this week or last week we're kind of the 1 year anniversary from the time that we kind of basically founded the project Yield app, and we had kind of a first kind of initial kickoff meetings of starting a company. So it's been quite a wild year. We kind of kicked off last year and then kind of the DeFi summer, and went through a kind of a first initial downturn, and then we had obviously a pretty strong bull market, and so it's been a good ride. We had a public launch after we raised our funding, and we closed that in December. Had a public launch in February. Since then, we've had really solid, strong growth, kind of week over week. So to kind of hit that 6 months of operations is where we're at right now, and I think we have over 53,000 clients and over $300 million invested into Yield app, and it's been a kind of a wild ride, and it's been really kind of moving fast, and kind of one of the areas that we've really always wanted to touch on and kind of build out was insurance, and kind of why we got involved with Jonathan Libby kind of early on in this journey to kind of help us better understand the insurance landscape in DeFi, and overall how can we protect our business and protect our users.
That's awesome. Thank you. And you have recently launched a new Bitcoin fund. How's that been going?
Yeah, we reopened a fund. So we originally kind of opened up a fund to bring an initial 500 Bitcoins. And last Friday, we reopened the fund, and we actually closed it this afternoon. And, it was near capacity. I don't have the final numbers yet, but I think it was at near capacity. So I think we now have close to 1,000 Bitcoins now in under management. So we're quite a lot of enthusiasm for people with Bitcoin that want to put it to work, especially that's all powered through decentralized finance.
That's cool. 1,000 Bitcoins is a lot.
Yeah, congrats, Tim. It's a big number right there. It should be exciting to see what Yield can do with all those Bitcoin. If they can move the market around, it'd be keen to track the wallets if possible.
Well, I mean, you're welcome to. I think it's all available on chain if you'd like to. But yeah, our team is kind of hard at work and built out strategies, and ultimately just what we see is very, very conservative yet high yielding opportunities in Bitcoin for invest your Bitcoin in decentralized finance. So, but you're welcome, Cash, anytime to check the wallets.
Fantastic.
Will do. But Tim, regarding steady state, what did you begin to look for a new insurance solution instead of using some of those currently available, like Nexus Mutual, for example?
Yeah, it's a great question. But I guess, Jonathan, I'm sure you've probably told some of your users about your community about how we kind of kicked off this journey. But we originally kind of engaged with Jonathan, who was kind of an expert in the DeFi insurance space, and we brought him on to try to help us better understand how do we actually protect ourselves and kind of understand the current landscape. So we did spend a long time really analyzing the market, trying to talk to all the key players. I guess the real problem that we really saw with the incumbent players was a couple fronts. One is, we have a growing assets under management that is basically growing on a daily basis. We have investors that are coming onto our platform and investing as little as $100, and there's people investing multi-millions of dollars with us at the same time. And how do we provide adequate insurance for people, because this is really a big barrier, right, for DeFi going mainstream, for kind of crypto investing going mainstream. So it's just to better understand this. So we thought we needed to take a bit of a different approach, one that could more ensure kind of the overall the company instead of the individual users. So we're still in this journey, and we just didn't really see anything really capable on the market for our specific needs on be able to ensure the company overall and our DeFi portfolio, which is while we are very rigorous on we build out all security measures, but as you've kind of spoke on there, this is the world of crypto, and there are exploits and hacks that are happening almost daily. So it's it's kind of a fine line of a journey that we're taking, but overall I think we have a vision with Steady State together to work very closely with the team and ultimately provide a service that is going to enhance the usability of Yield App platform, which I think that whatever is developed with us and with other partners, we'll be able to take to a large market that just overall provides more protection for the entire DeFi landscape.
That is really awesome. Akash, do you want to add anything?
Yeah, so what Tim said is obviously covers most of it, but just want to remind users something you mentioned at the very start, Sylvia. Liquid Exchange, which got hacked, is of course doesn't really work in DeFi. It's a custodial centralized exchange, and this is a good time to kind of remind users and to anyone listening here that Steady State will not only cover DeFi protocols, but also it will have customizable coverage pools open to even custodial services such as wallets, centralized exchanges, and all sorts of different protocols which can work outside DeFi. That's the beauty of our coverage pools. And we often think of crypto, the world to solve that. Crypto world will actually solve all of our problems because it takes out the middleman. But in the situation where there's a middleman to just centralized exchange, we can still cover those protocols. And even big centralized exchanges such as Liquid Exchange will make these mistakes. And it's audits and research and can only go so far. It's all run by people, and humans just make mistakes in general, which is why Steady State exists, and this why digital security is important. And everyone needs to make smarter choice. And of course, the smarter choice is to get insurance on any assets that you hold.
That's very true. Thank you, Akash. What specifically makes Steady State a workable solution for Yield App and other CeFi platforms?
Are you talking about specifically Yield App, like a CeFi DeFi platform like that? For Yield App, so Yield App is a very good fund manager. It's a lot of their aspects where they aggregate capital and they move it around. And they create very high rate of returns, competitive very competitive with market averages. So I think what Steady State does and what we're doing for Yield App is Yield App they have a very well risk managed diversified portfolio with a lot of different protocols. So when they're in all these protocols, you're looking at, if an event happens, you're looking at a percent of whatever the portfolio being invested, losing a portion of that, whatever portfolio is invested in that. So it's something like Yield Up, what they need control of, help with this, is they're trying to manage the risk of their exposure on a per protocol, on a per event basis. What they also need is on those exposures, if something does happen, another arbitrage hedge or some kind of like a hedge, something that can walk in and cover if an event does happen. So with Yield App, they're sharing the funds, they're doing a great job managing the risk. But if that does happen and they see a percent loss in the portfolio that they've made is manageable, is in their system, they still would like to receive those funds to make sure they can keep with their stable growth and make sure they can keep things moving. And that's what Steady State's going to do. They're going to have exposure to multiple different assets in their protocols in their portfolio, and we ensure their exposure on cat event risk, catastrophe risk, and that's what they're looking for, and that's kind of the value add that they need, where they're doing their job as finance professionals, but there's some things finance professional cannot just cover, and that's where we step in and do
that. Tim, did you want to add anything?
Yeah, I mean, that was quite a good summary, and overall, just the flexibility, obviously, of working with Steady State, and obviously, if you look at a lot of the service providers, right, they're designed for kind of individual users, and as kind of Jonathan kind of mentioned, I mean, we have diverse positions, and they are kind of continue to evolve very quickly, and as our assets and their management continues to evolve. So we ultimately need like an insurance partner that can work quite closely with us to ultimately build to provide that coverage that we so need.
For Yield App, if I can add more, if the Yield App gets coverage for their exposure, and you can also ensure the protocols they're exposed to, that creates for these kind of fund managers, whether you're in finance, Yield App, or maybe Celsius, or any of those other kind of competitors, what that does is that creates a really fundamentally strong layer of not just as yield insured, but the assets and the protocols they're using themselves are insured. The model we build is actually meant to be good for both groups, ironically, and it's actually even better for the asset managers in some ways where they can get double layered coverage. So it actually encourages protocols to work with one another and to actually interact with one another, whether it's CeFi, DeFi, or just protocols. Because if they use the protocol and that protocol is coverage and they have coverage on their exposure to the protocol and say, no, someone has the exposure on their coverage to the protocol, you can create some really thick layers that can be actually managed very well. And actually you can make sure groups like Yield App are able to take care of, they very easily take care of their community through the double, triple layers.
Thanks, John. But what are your plans, Tim, in regarding to implementing Steady State for Yield App? Like, what do you expect it to look like, or how will it look like exactly?
Well, we're still in the process of kind of building this out together, and so obviously with Jonathan Cash and the development team, the plans are we will be working quite closely together with our development and operational team, on this build out. So it's really, I'd say it's kind of a very fluid kind of a relationship, and I think that's probably the advantage that Steady State has over so many competitors, is they have they're directly building this with a client, right? It's very specific needs, and very understanding what can we actually pay for coverage, and this is when going through this process, right, you get to kind of analyze a lot of the problems, because the typical cost of insuring in DeFi is actually higher than the actual yields you can kind of generate. So it's really been very counterproductive for a lot of part, but it's part of the this evolution that's kind of taking place, and so we get to to build this together as we move down. So the overall, I mean, we're quite optimistic that we are moving towards an optimal solution for our clients and to help our business grow.
That is great to hear. Really cool. But do you have any foresight or predictions on the market or on how CeFi DeFi will perform?
It's quite a broad question, but I'll take a stab at it here. So CeFi and DeFi, I mean, there is a lot of emergence. There are companies like ours that are, helping to kind of bridge this gap. There's regulatory uncertainty worldwide, and as kind of these KYC and travel rules are appearing to start to come into effect, and so we're all trying to understand how this is all going to be kind of shaped out. So particularly the interaction with CeFi and DeFi is quite unknown, right? But I think the one thing you can go into it obviously is having your own proper KYC and AML kind of procedures of how do you kind of interact with DeFi. Those that want to be completely anonymous actors, will probably have a difficult time navigating the future of crypto, especially as you ultimately want to enter kind of centralized exchanges. So while DeFi is extremely powerful and innovative and revolutionary, right, the reality is today you basically have gateways. So you have centralized gateways that lead into DeFi. So whether you like it or not, it's very hard to for most people, period, to kind of enter and exit DeFi without using essentially centralized services like Yield App and so many others. So it's it will continue to shape out. I mean, how's that going to look like? Well, I think like there's going to be probably some disruption, but I think still the optimism, I would say you can see in the market right now is as much disruption as we've had by regulators over the last few months, and as much enthusiasm that is in crypto at the moment. I think the future is quite bright of where this is going right now. Cash, you're an ex lawyer. I would love to hear your thoughts on the moment.
Oh, look, I'm more of a degen liquidity miner now, but what you said is true though, because CeFi isn't going anywhere. Like I definitely think DeFi has way more room to grow, given that it's in infancy, and there's just so many cool things happening right now. Like I was reading about this new DEX today, this new technology which you can trade, what they're building is they can trade across chain really seamlessly. I mean, I don't know how they're going to do that, but apparently it's a thing. It might be a thing. I don't know if they can build it, but it looks pretty promising. Yesterday, I had a chat with a group that was building. I think it was it was a group that was building and launching a privacy cross-chain protocol, which can transfer funds across each chain, from ETH to AVAX, so from BSC to Polygon through ZK Snark. So privacy transactions, it's kind of like Tornado Cash, but across chain. So these things are being built every day, and DeFi is just so early. Like I think in 5 years' time, we're all going to have a laugh about how far we've come from what's going on here, and hopefully insurance will be a big part of moving it forward. But yeah, but that goes against the CeFi, because everyone wants these the kind of rates that Yield offers, or Equify offers, and these kind of companies which centralized finance CeFi companies which use the DeFi network to get these gains. Now, I was telling my parents about these returns and the kind of like promising sort of features about these Yield App and these kind of companies. And there's no way my parents or my sister would get a MetaMask wallet and try and get funds on the new DeFi protocol. So CeFi is I see both very, very positive futures for both. I first got involved in crypto through CeFi. Most people do. It's just the only way to onboard money, right? So it's definitely not going anywhere. And then when people learn more about DeFi, maybe they'll want to explore and put some funds on new protocols and play the degenerate liquidity mining casino, and hopefully their funds don't get rugged. But for most people, I think they'll probably leave their funds on a nice CeFi, like a 10%, 12% return they can get. They're not going to have any issues with that. Especially the older you get, the more you want a middleman, sort of centralized entity to manage your money. So it's it's very positive for both those categories.
Definitely agree with you guys. But lastly, Jonathan Akash, do you care to comment on the partnership with Yield App? Tim said that it's work in progress, but how has that been working on, or how has been working well with?
We're gonna be working very closely together on the product side. We're really starting we would have been talking the build out, obviously been very active on it. We're really working alongside the product and portfolio team with Yield.app, starting really very closely as of next week. And we're going to be making sure that every build out, make sure it works for Yield, and Yield's needs are going to be important for how we build it out, being that they're one of our first clients. And so our developer team is working hard. We're picking the architecture together. We're presenting to the CTO and their product team, and basically we're going to start moving from there and making sure that we are meeting their needs directly. And a lot of the things we're going to build around, at least the original build out, make sure we're meeting our clients' needs like Yield. And so Tim's been great to work with. He's a really there's a lot of noise that goes around, and Tim is the voice of reason. I feel like a lot of days when I talk to people, I think I get a lot of great advice, but Tim is always the voice of reason. Just like, yeah, it's good advice, but it doesn't apply right now or something. He's been very, very good to work with. I hope I've been tolerable or good to work with alongside his end, and I really want to make sure Yield App successful and Steady State successful and helps build out Yield App. I really believe in this guy and really thankful for everything he's given for me.
Yeah, just adding on what Jonathan said, we have weekly meetings with Tim and Justin. They're great help, not just from the development side that we're going to move forward with, but introducing us to investors, introducing us to sort of a lot of their partners. Assisting with marketing, business development services. So it's a whole package, and I think the partnership's only just getting started. And the more we the more we both protocols grow, especially Steady State, because we've only just begun, but the more value we'll see out from Yield App and vice versa. So it's a very exciting time for us. Look, it hasn't been the easiest couple of months. Obviously, when we're a new company, we're still growing, we're still finding our own feet. But the whole point is Yield assists us with the entire process, especially leading up to our IDO and platform launch. Their involvement will, I expect, to grow. And it's very positive, and for not just for myself, but the entire team itself. Like the marketing team can liaise with the Yield marketing team, our development team can liaise with the Yield development team. So it's a very positive sort of involvement between Yield App and Steady State. And hoping that once we've launched, we can assist Yield with assist and contribute towards Yield's activities as well.
No, it's definitely it's been great to work with everyone. It's this is for everyone out there. I mean, it is very hard to build true value in crypto. It's very easy to say you're going to build value and to put up a pitch deck of a cross chain DEX that's gonna come out next week, right? But to build it, to deliver on it, is another question. So it is there's always a million challenges out there in this, and obviously building with distributed teams and everything. So Jonathan's has a very bright future ahead. I think everyone part of the Steady State ecosystem probably knows and recognizes this. He's a true bright talent. He's young, but he's already accomplished quite a bit in his professional career. And it's great to work with the teams. Obviously, time zones are always a challenge, but I think the future is bright for Steady State. Just keep getting progress every day, and we're very happy to be partners with Steady State and be part of the journey.
That was really great to hear, and loved John's reaction on time zones. Because I get it. But that's really great. Thank you. Let's see. Our viewers today also asked some questions. So we have Steve Phillips, who asked, is there an estimated price of what it will cost to insure ourselves per 100K we have on Yield App?
So for Yield App, I obviously I speak for Yield App themselves, but what I can say with Steady State and how Yield App works is we prioritize ourselves to be customizable for the protocol. So what that means is the protocol has a coverage pool. Yield App will know how much actual collateral they have directly for Yield App in the initial V1, and then there'll be like a variable floating rate on top in a V2. We're planning to build out with our own actual insurance fund long term, and basically, but they'll have a fixed amount they know for sure. What that collateral will provide then is like Yield knows if an event happens that meets criteria, they receive that money, and it's automated on a system. So what Yield App knows is they have XYZ amount of coverage. They know how much coverage they need to get, which is around 20% of their portfolio, and basically from there they can either choose to just insure, like as a protocol, anyone in the protocol can choose to insure. If they know they want, if they, as they're growing their fund, they can offer priorities for people that are willing to forsake a portion of their yields to make sure they get extra level of coverage. It can really diversify and vary, and it's up to like there's a million ways they can go by and customize building it out, and I think they'll probably have a better idea closer to product phase. But the goal is to make sure they have the collateral, they have a pure system that works and is meant to pay out for them. And then, once they know the capital and they're aware of how much they have, they can provide whatever criteria they want. And I imagine a lot of different groups and DeFi protocols and DAOs are going to do however differently. And that's the point we're trying to build out. And we'll probably build a couple of marketing models for them to use.
That's really dope. Anyone else?
I'll add to that one a little bit. I mean, that's a great answer, Jonathan. We haven't been able to properly price this out, yet on our side. And the way we're kind of looking at obviously is how do we, how can we price this into our model? And so we're looking at a number of different ways. We have updates to our own WildD model coming in V2, and how can we actually kind of price this in? So ideally we'll be able to offer this coverage on behalf of our clients, so they would have to take out an individual premium, but we can actually build out that own insurance pool on our side. So it's still said it's a lot of work that's gone into this. We're still obviously going to build this out on the product side and the finance side, and we will be announcing it kind of in probably the coming months once things are kind of clear and closer to launch.
Awesome. Can't wait to see it. We also had a question from Trading Knowledge, who asked, how did Yield App and Steady State cross paths anyway?
You're in finance. I met one of the co-founders at Yield App back in the day on a You're in Finance governance chat, talking about bonds. And then later down the road, I met Yield App and Tim and on other calls, and we ended up going to work together. Stay on those crypto governance forums, guys. They'll provide value one day. That's I met Tim, and Justin and those guys probably in March and late February, early March. And, we decided we want to work together probably mid-March and start building a solution for Steady State. And basically when we decided we want to work together, the original idea was build a solution for Yield App. I got a lot of criteria about how to build an actual solution for Yield App, and they looked at our model. And I remember the funniest call was when I presented the model. They're like, this is interesting. And Tim was like, why isn't this an on-chain model? And like, why isn't this like a solution for the industry? And like, well, I told him like, well, you guys gave me this criteria. He's like, okay, everyone, no one give John a criteria. John, build something else like that's similar to this. And he kind of called me. He's like, you just got to build something. And I kind of put together Steady State, and that's kind of like how we met and how we kind of put together. It was about a month and a half of working to build this model. I would say a month and a half, 2 months, and then we started the build out from there and actual announcing and working. But it was, it's been really great to work alongside these guys. They're good mentors and great help.
Thank you. That's a cool story. And we do have our last question, which is not, I think, related. I don't even know if I should ask it, but I'll ask anyway because it was asked. When does Akash plan to shave?
Well, I'm working from home now, so it's pretty chill. I don't know about that. I do trim my beard every couple of days. I don't know. I just don't think I'll shave it. It's I gotta hide my jaw. That's the tactic you got to go with. If you don't have a great jaw, you gotta put a beard on, hide the jaw. It's just easier. Yeah, my jaw doesn't compare to Tim Frost's 6'7" frame and jaw. So it's I can't really match up yet.
I don't shave. You look good anyways, guys.
You do. You look great.
Thanks, guys.
We also had another question popping up here from Katie Peary. Is it hard to work with all these uncertain regulations? How do you guys navigate?
Yeah. Probably should have let the lawyer answer this, but I'm going to take a shot at it real quick. We understand it's a really uncertain market, and the products we are building, I think, are absolutely needed in the industry. Our solutions needed. How our reinsurance model, prioritizing, and then moving to an insurance model long term. There are a lot of uncertain regulations. We're always trying to navigate that, and I think I have a pulse in DC. I used to work in politics for a little bit. I actually have a lot of people have been keeping me up to date and asking me a lot of personal questions, congressmen and senators, about crypto and DeFi. It's been kind of interesting. Like, John, what's a DeFi? But yeah, so it's kind of like what you have to do is you have to be as compliant as possible and make sure you be as compliant as possible. Our approach is we know the rules of where we're at and we're building, and compliance will really come more so as the product comes closer to launch. And what we're doing now is we're trying to be as compliant as we possibly can up to where we're at, and making sure if anyone wants to look at us, we're clean as a whistle. And then eventually, Yield App is obviously a new approach where they're moving way ahead of regulation expectations and trying to make sure they're going to be relevant for long term. And our goal is, DeFi, they're a CeFi DeFi bottleneck. We're DeFi fully. And so we rather are just trying to be as compliant as well, meet our fiduciary obligations to investors, and making sure we're being very intelligent with how we're going by acting. And, down the road, if we see more regulations or we know it's more to anticipate what to expect for DeFi protocols and the code, we'll be acting accordingly. But there are a lot of things we're taking into consideration. A lot of things Tim and I've talked. Do we move ship totally? And maybe we'll have to do that down the road in the V2 launch. There's a lot of things we're considering. But the goal right now is to be as compliant as possible and follow the rules and make sure we don't act like we're outside of the law, but act within it and know what we do know we work in, and what we think we need to know we be compliant with. And we think that's the smartest move for now.
Yeah, this is the kind of question which could the topic could fill an entire show. So maybe in the future we can have Jason from Yield as well as Paolo and Tony from Steady State and come and talk law and compliance. It's one of those things which if there's enough interest in, we can try and host one of those shows. So I know law is not the most sexiest topic out there, but it is pretty relevant out, and especially with what's happening in America every single day, it is frustrating. Reading about this, and it is stifling growth, especially in an area like Texas, where Steady State has a development team and main office. So it's just from our end here, we're trying to build and grow the industry. We're trying to do something new, innovative. We want to help people, the average user, get into decentralized protocol and manage their money in a better way. It's really frustrating hearing senators and congressmen and whatever just talk about try and come up with regulations which stifles everything we're trying to do and build. As John said, we've got some fantastic lawyers in our team, and as well as external legal counsel. All we can do at this stage is listen to their advice and just be compliant and hope things work out in the future in relation to the laws that we're governed with and the laws which come into play.
Awesome. I think that's the smartest move, probably, indeed. But that's it with the questions. Many thanks to our speakers, Tim, Jonathan, and Akash. Great discussion we had. Thank you all for tuning in. See you all next week in our Fireside Chat.
Thanks, Sylvia. Thanks, John. Thanks, Tim.
Also, Steady State's Discord is now live. You can join the community or the Telegram community by QRing this code here. QR this code, and you can join the community, find all the information, get your questions answered, and see you all next week. Thank you. Bye. Aha, DeFi hacks, history repeats itself. What to do is our next week's topic, as you can see. Did everyone leave? No. No, we're still live. History repeats itself. What to do? We'll find the answer next week.